Now for a check on the media sector's performance on the share market this week, we're joined by Evan Lucas from IG. Evan, great to see you as always. You've been watching 10 shares rising this week. What's behind that?
Yeah, 10 certainly on the way up. They do have a huge amount of support at around about 25 cents, so they bounced off that very, very nicely over the last week. What has also sort of eventuated is that between May and around about July is their real return in terms of viewer on screens. MasterChef is already seeing some very good returns. Offspring is around about 2 or 3 weeks away, and the advertisement dollars behind that is certainly driving the market's interest on the fact that the share price is quite low. So 10 is seeing that sort of interest as they do come into their more lucrative part of the year, and that's why the share price is certainly ramping up.
Evan, Twitter shares took a fall this week as the post-IPO lock-up period expired, but is there any more to it than that?
Yeah, look, I think there's got to be, James. If you have a look, and what we do here in the markets, if you look at it from a fundamental basis, it's very, very hard to see how it's monetising its business. And on a PE basis, it's currently trading at 356 times forward earnings. Now, that is, in any metric, incredibly expensive. And the fact that you've seen that lockup of the internal users now spitting out as well, that's a real issue. So Twitter has dropped off almost 22% since last Thursday when we first started talking about this. And it is also across Weibo as well. If you want to look at Weibo, the Chinese version, it's under the same idea as how do you monetize this? How do you get that advertisement dollar to really penetrate the user? And at the moment, the share market's very, very unsure about how that's happening. And for that reason, it is moving away in the wrong direction at the moment.
Evan, thank you so much for that.
Thanks, guys.
Evan Lucas there from IG. Well, more earnings out of those US media companies. 21st Century Fox lifting revenues by 12% in the latest quarter, thanks to the Super Bowl and other sports and cable TV programming. Let's get some more on this with James Manning. Yeah, James, just in terms of the revenue result there and the operating earnings, it seemed to beat expectations.
Yeah, it was sort of good news, wasn't it? I actually missed the earnings call this morning, so I'm still getting my head around. It's actually 8 a year now, post the News Corp split. Of course, 4 for the old News Corp, 4 for the new 21st Century Fox. But yeah, those TV figures were good. Yeah, the biggest Super Bowl ever. They had it this year on their TV channels. Lots of other. Well, Rupert Murdoch, of course, talked about the impact of live sport. You know, as we talk on the show often for television now, it's all about big events, and live sport is one of your cornerstones. They had some ad revenue growth too, which was good, 8% up at their cable US channels, and affiliate fees that cable broadcasters all around the states pay for taking those Fox channels also did well, and some of the European numbers weren't too bad too, from Sky Italia, Sky Deutschland, and what they own of Sky B.
Interesting too, just confirmation coming that 21st Century Fox will be likely delisted from the ASX 8th of May now too, so today. So just turning to some other news as well, Fairfax, we've seen plans for more job cuts, another 70, and a rally, a protest by staff. Yeah,
24-hour strike, yeah, 3 parts of the business that's going to affect the production, which they'd subcontracted a lot of subbing, page layout to page masters. That deal is coming up for review, but it seems, and I haven't sort of confirmed this yet, but reading what Fairfax has put out so far, looks like they're going to renew that deal, and there might even be more people going, and so page masters or people like that will do more things that used to be done in-house. The photographers, big focus on that, losing a lot of their staff photographers. A lot of people think that's, you know, it's really going to affect the quality there. Again, they'll sub that out. They've done a deal with Getty Images, who'll supply some of their photographers to work on Fairfax stuff, and maybe use more of the library content. And then the Life Media vertical, if you like, that will some of that again will be subcontracted out. A lot of the contributors will become, you know, freelance contributors as opposed to full-time employees.
Just aside from, I guess, the Packer versus Gingell fight, Nine's Finance and Operating Chief Simon Kelly was speaking at the Macquarie Investment Conference this week, and just reaffirming a few things that we'd expected about you know, the target for TV ad revenue share, and also the potential of what Nine would do if deregulation. Yeah,
look, they're very keen. They want to get back to #1 in ad revenue again, get up around that 40% figure, push 7 aside if you like there. And they've reiterated, look, they are looking for acquisitions. They've got a balance sheet that could handle some purchases. Look, not interested in print, they said, but look, regional TV, radio and outdoor media are areas they've identified. A lot of changes in outdoor media, so I'm not sure if there's much available there, but definitely areas they've identified.
Interesting. Also, lots of courtroom drama coming up. We've got, 7 versus 9 over the Melbourne Cup?
Yep, that's 7 claiming that 9 infringed their copyrights. They had exclusive coverage of the Melbourne Cup. Other networks can only show, I'm not sure how long, but only an excerpt of the race. They're claiming 9, at least in one particular market, I think, showed the whole race and maybe tried to blur out the 7 watermark in the corner. You were just talking about watermarks. 9, I think, are going to challenge that, and I don't know whether they'll be able to maybe come up with some, they might be able to cite some case where they think maybe 7 used some of their copyright. So it'd be interesting to see how 9 respond to that. And the other one, of course, we've been watching is the 7 versus 10 over John Stevens. I think that hits the court next week, so we'll probably have a bit more on that next week. But yeah, interesting times.
Sure is. Interesting too to see the Zenith Optomedia ranking of the world's top 30 media companies.
Yeah, we like a good list, don't we, Bridie?
We do.
Yeah, look, 30 biggest global media proprietors, companies, if you like. I think it's all ranked by revenue. Google way out in front, of course, again. Interesting things, though. 2 Chinese companies turned up on the list for the first time, so that was a development there. 5 internet-only companies in the top 30, so that's all they focus on is internet media. And see how the News Corp and 21st Century Fox turned up on the list post-split. Investors have always said 21st Century Fox looked a bit more of an exciting proposition. That ranks at number 4. News Corp back down at number 12. So, yeah, a bit of difference between the 2 split divisions.
Just finally, some sad news late last week. Paul Ramsey passing away, of course, instrumental in the expansion of Prime Media. Yeah,
and look, 29 years, I think he was the chair, the founder of Prime Media. Saw a lot of changes in that time in the regional broadcaster setups. We heard from Ian Audsley, the current boss of Prime. Of course, Paul Ramsey sold out his shareholding only recently at Prime, but long-time partner with Channel 7, of course, takes their signals into regional markets. And we heard from both Kerry Stokes and Tim Warner. Tim Warner said, we all need a Paul Ramsey in our lives.
James, thank you so much for that. Plenty more to ask James about coming up on Media Week, including all of the latest TV ratings.